Good afternoon and welcome to today's session on AML and source of funds issues. I'm Robert Kelly from Stewart Title, and we're very happy to be supporting IQ Legal Training in this webinar today. Ian will be looking at some issues to do with AML sources. We also have colleagues here from legal brokers who will be telling you about some of the products which they have to make these problems much easier and to make the job of onboarding clients safer for you and for them. So Ian, I'll hand over to you if you want to start.
Thank you very much, Robert. Good afternoon, everyone. I've turned my camera off because I've got some connectivity issues, so I apologise for that. Well, I shouldn't apologise. I should say you're very lucky that you don't have to look at me this afternoon. I'm delighted that I've got Darren Batakali from Legal Brokers with us this afternoon. And Darren, you're going to take me through and take the delegates through a product of yours that I think will be very useful for practitioners that have concerns, as they should have, with regard to AML. So I'm happy to act as your sort of assistant with regard to slide movement, but over to you, Darren.
Great, thanks very much, Ian, and thanks very much, Stewart Title, for hosting this webinar. As an introduction, we are legal brokers, and idwallet.com is our brand that we provide AML products through. So today we want to take you through what products we have available, how we can help with AML issues, and sort of highlight a couple of products as well as the AML products that might be able to help you. So Ian, if I can ask you to go on to the first slide for us, please. Okay, so we've got three products that we're going to show you today: ID Bronze, Silver and Gold. So the first one we've got up on the screen there is ID Bronze. The idea behind our Bronze, Silver and Gold packages is really tailored towards the needs of the solicitors to help establish who their clients are and fall in line with your own process and procedures. So from the ID Bronze, this is the basic package that we have. You can see there that it starts at £2.20 plus VAT. What does this do? It's a simple anti-money laundering check. There's no need for any intervention from the client. They won't be bothered by this. This is really for the people out there that see their clients face to face. So if you've seen your client face to face, if you've got the ID certified, taking copies yourselves, this is probably the check that you need. It's probably an important point to say at this moment in time that we've met with some solicitors that still have the luxury, I suppose, of seeing their clients face to face. A lot of local clients, which is great, but they don't do any further checks apart from obtain the copies and meet the person face to face. The SRA regulations, as far as I'm aware, and I think Ian will go into this in a bit more detail, is that you still need to do a check on the people that you are seeing face to face. This is to ensure that there's no AML issues with them, not just about their documentation they're providing to you. So this particular product is very quick and very simple and available via the portal. All you need is a client's name, address, telephone number, date of birth. Once you put the information in, our systems will then check the name against the address that's been inputted, and it will also check the PEPs and sanctions list for you. So what the technical side of this does is our system's quite sophisticated, and in order to check somebody's address and check that they are, I suppose, living at that address and they have the appropriate connections with that address, is what we're looking to do is make connections with credit reference agencies. And what this does is you need what's called a 2+2 situation in order to pass an AML check. What that means is that you need to check two different credit sources with two different credit lines. So if I give you an example, if somebody has a bank account with Barclays, has a MasterCard or a Barclay card or some other line of credit with them, if that's the only source of credit they've got, they may fail the AML on the basis they've only got one credit source. Most people nowadays have a mobile phone, they have some kind of credit, whether it's furniture, a car, even a mortgage. They're the different suppliers of credit that we're looking for. And between the data sources that we have, we cover around 95 to 97% of the population. So within a few minutes, you'll get a report back from ourselves, and I'll show you an example later on. You'll get a pass or a fail or a refer. It is important to note that if you do get a refer or a fail, there are still ways that you can act on behalf of the client, and we will talk you through those as and when those reports come in. So a very simple report: input the client's basic details. It'll check the address, the mortality of the client, i.e. whether they're alive, and whether they are on the PEPs and sanctions. At this moment, if I highlight the PEPs for you, the politically exposed people's list, again, it's not uncommon to get somebody with the same name as your client that will appear on the PEPs list. What do we do in these circumstances? Well, you'll get a detailed list from us about those people that match your client. So quite a lot of these will have pictures. They'll tell you the location and the date of birth of the person that is politically exposed. That will then give you a refer notification. So you should at that point review the PEP list and let us know whether that is your client. There are identifying features, like I say, date of birth, address, and more commonly the picture. If you're satisfied it's not your client, we can update that list for you and get it onto a pass, so you've got a pass on your first product. Very, very simple, very quick, very easy to run, very cheap as well. So we would say the minimum you should be doing is this check, even if you see your clients face to face. So please do take note of that. We are aware that some people, even though they see clients face to face, they're not doing this check. So the next product, Ian, if I can ask you just to move along. On to the next slide, please. ID Silver. The ID Silver product is for any solicitor. A lot more conveyancers do use this particular product. The AML, PEPs and sanctions are still checked. So everything in bronze, you will get in this particular check. It does state on the slide, I think, that it's a biometric liveness check via an app. We've updated it recently. It's no longer need an app to actually run the check. It can be done by web link. The process, very simple again, input the client's name, email address, date of birth and mobile number. The client will then get a simple text message with a web link. They'll be asked to confirm the details, and then they'll move on to a next section which will ask them to take a live picture of themselves. The way that the system works and the way that the technology works, if you have what's called passive liveness. What it's doing is the client is moving the camera around and taking a selfie. It can tell the 3D points on the face. It can tell whether that person is live. It can tell whether it's a printout, which, believe it or not, we've had before. Somebody tried to take a picture of a printout of a person and pass it through. It won't get through unless it's happy that that person is live in front of them. If there are any doubts, it will ask the client to make a motion, touch the nose, touch the chin, wave at the camera, and it will take a picture whilst they're actually enacting that motion. What it'll then do is it'll move on and ask them to take a picture of their ID. So the passport or the driving license, whichever they have to hand, it does ask them to have it to hand when they get ready to start the process. And then the system will upload pictures of the client and pictures of their ID. At that point, it will then perform a biometric check against the picture that's been taken of the client, i.e. the selfie, and the actual ID that they've provided. And it will confirm whether biometrically that person matches their ID. So within your report, you'll have all the PEPs and sanctions, address and mortality. You'll then have a selfie of the client, confirmation that they've passed the liveness check, and confirmation that their ID, which has been uploaded, matches that person. Very, very quick and simple, helps with onboarding your clients. If you've got any clients that are not in the local area, we recommend that this is done at the minimum. Then you've got a live picture of the client, you can see who they are, and you can undertake further checks if needed. So again, the client probably has a 2-minute journey to follow. Very easy, very simple. These are available to everybody, and they start at £7 plus VAT. Very quick and very simple. The final product, if I can ask Ian just to move along to the last slide, is the ID Gold. This is designed specifically for conveyancers. You'll be aware, or I'm sure most of you are, of the Safe Harbour compliance nowadays, and this ID Gold is Safe Harbour compliant. It does perform the previous check, so it has everything in bronze, the AML, PEPs and sanctions, it has everything in silver, the liveness check and the biometric check. But this goes one step further to ensure compliance. First of all, it will ask the client to upload a proof of address document. If you're a purchaser, only one document is needed. If you're a seller, there'll be 2 documents, one for their home address and one for the address that they are selling, if it's different. At that point, the app that they download will ask them to place their passport on top of the phone, and this is where the techie bit, I suppose, kicks in. There's an NFC chip reader within the app that will then read the chip on their passport. It will then compare the information held within the chip to the information held in the passport and confirm whether it matches. It still does the biometric check, it still does a liveness check, ensure everything passes. So you've effectively got 3 reports in one, an AML check, a liveness check, and you've also got the NFC chip reader within the passport having been read. It allows for all Safe Harbour compliance, and it is an important factor. It is what we're sort of pushing out to all conveyancers at this moment in time. It's the highest level of check that you can actually obtain at the moment, and we're running those at the moment for £10 plus VAT. So if I can just ask Ian to go on to the next slide, just to give everyone a look and a feel as to what the reports will look like. This is a very simple, quick ID bronze report. As you can see there, it's a clear pass. And if you look in the summary, you can see address and mortality has been checked and the sanctions and PEP profiles have been checked as well. So the system, it takes just a few minutes. It's all data held within different data sources that our system goes out there, collects all the information, and doesn't take very long at all to provide this report. What we also like to highlight is that we do check all of these reports manually. So when the information comes back, we have somebody on hand to read all of the information. If there is an obvious mistake, we often get date of birth maybe slightly wrong, a misspelling somewhere, we will come to you and we'll ask you whether you want us to rerun the check, and quite often we'll do that free of charge for you. So if there is a little anomaly, which does happen sometimes, please let us know. We're quite happy to help you out, do what we can to make sure the information inputted is correct. Just having a quick look at it, you can see the address and mortality section. You can see the credit databases that are checked there with all the ticks next to them. And it also checks electoral roll, the electoral register. And on the right-hand side, you can see that it's checked the UK mortality. If there is a fail on your report, we will highlight this to you, and we're quite happy to discuss with people why it may have failed. We can't give you specific advice of how do you pass a check, because that would give people a little bit too much information. But for example, if people have recently moved into an address that may not have the appropriate credit databases being checked, please do check with your clients how long they've lived in the address. Obviously, if they've moved recently, you might want to check why, and that's another AML issue. We do recommend you check addresses for at least 3 years, and if you can get a succession of addresses where you've got a couple of passes and then an explanation as to why they've moved, evidence as to why they've moved, and you're satisfied with that, you can then pass and move on. Other sort of areas that we work in, and another specific product that you may be interested in, just as a sort of tease, I suppose it is. I'm not sure whether Ian's going to touch on this. Working with Stewart Title, they have brought out a fraud solution policy. So there is that available from us, and if you want to talk about that later on, please let me know, and I'll be happy to do that. And towards the end of these slides, I think Ian's going to put a slide up at the end that anybody that registers with us in the next month, within the month of December, we will be happy to provide some free checks for you, just so you can get used to our products and see how we work, and any feedback related to our products will be greatly appreciated. I think that's from me, so it's back to Ian and with his slides.
Thank you, Darren. Thanks very much. And again, worth having a chat with Darren and the team about this service. And of course, Darren has a number of other services that he provides to solicitors, be it searches, his association with Stewart Title with regard to title indemnity insurance, and lots of other things. So if you get the opportunity, have a look at Legal Broker's website, see what they've got to do, and talk to Darren about whatever needs or demands you have with regard to products. So thanks for that, Darren, and thank you for Stewart Title for inviting me along and for funding this presentation on AML. So what, first of all, I always do when doing presentations such as this is just highlight some useful websites. Darren touched on sort of seller identity fraud and the Stewart Title seller identity fraud product, which I highly commend. If you haven't seen it, do have a look at it. It eliminates the risk of your buyer client and you as the buyer's conveyancer being subjected to fraud as a consequence of seller identity fraud, where I'm sure you'll be aware if if loss is sustained, it will be total loss. And what the insurance policy does is cover your client and basically covers you in connection with a negligence claim in connection with the loss that the buyer client sustains. The reason I mentioned that, on the PLA website, there's a paper written by a barrister called Nick Taggart. Nick's a great guy, to be honest with you, really friendly guy, really good barrister too. But he wrote a paper on seller identity fraud. Interesting point with regard to that, and one of the themes today, do be careful wherever you identify an issue during the conveyancing process that generates risk for the client. So if you're telling me as a client, Ian, look, there is a risk that the seller who you're buying from is a fraudster, I cannot guarantee 100% that the seller is who he says he is, okay? And I'm terrified about that, or I'm risk averse in that connection, then what you can do is say to me, well, there are three things we could do. One, we could ask the seller's conveyancer to verify their client's identity and to provide warranties in that regard. To be honest with you, no seller's conveyancer is going to honour that sort of request. Or we could take out an indemnity insurance policy to protect you. But if you highlight there's a risk and the client then says, well, crikey, I'm worried about it, you can't just leave the risk sort of hanging in the air. Either you've got to suggest to the client options or alternatives to deal with the risk, or to confirm in the report on title the fact that during due diligence you've identified a risk that is of concern to the client and that risk remains. So PLA website, the other sites you'll know about, have a look at them if you get the chance. I look at them all fairly frequently, to be honest with you. So first thing with regard to money laundering, first thing with regard to compliance issues, etc. Why take on new work? Well, we need to take on new work because our clients die, our clients move away, our clients fall out of the property market, whatever the reason. But I think it's important when you're looking at your existing workload and your existing client bank to say to yourself, well, are we retaining clients? Are we getting repeat work? Or are we having to look and trawl for new work all the time because we're not retaining clients, we're not getting clients coming back to us, having acted for them in connection with previous sales and purchases. Where we are taking on new work, are we assessing what that work is? And recently I've been doing a lot of work with Howdens, who are professional indemnity insurance brokers. And one of the things they're saying is, look, gather data, look at the data as to the types of transactions that you're dealing with, look at the types of work that you're dealing with, and report that to your broker or to your insurer, because it will have an impact on your professional indemnity insurance. I was talking at a conference recently, and someone from Howdens was also speaking, and they were saying that for firms that do nothing other than residential conveyancing, there are very few insurers in the marketplace. So if you can show that insurer that the work that you're doing is generally repeat work for existing clients, that will give them a degree of comfort, as opposed to the firm that's saying, well, 80% of our work is new work and 80% of our work is work that is won via the internet or something of that nature. So yeah, take on new work. While we're doing it, are we assessing risk? Key questions with regard to the work that we're doing. Is it work that we can do? Is it work that we're comfortable doing? Are we happy that we've got systems, controls and balances in place to avoid, eliminate or mitigate against risk? We need to think about our clients' needs. Are we acting or doing a lot of first-time buyer work? Are we doing a lot of work that involves the Building Safety Act? And again, just making sure that we've got the facility to meet the needs of the client and to ensure that we're delivering to clients what they need to receive. We need to assess what clients want from us, and we need to assess that we're able to do it. And again, with regard to AML, I've just been looking at some recent SDT decisions and some of the work of the SRA with regard to money laundering, and it is scary. It is scary how ill-prepared firms are. It is scary that firms are still just simply paying lip service to money laundering issues rather than actually creating policies, ensuring staff are aware of policies, adhering to policies and reviewing policies. And it's amazing how little data firms have and how infrequently they're reviewing that data and then reviewing policies, procedures, etc. as a consequence. When we looked at the CQS, and we've talked about CQS in the past, the new CQS, well, not the new CQS guidance that we saw when it was reviewed, was it last year or earlier this year? One of the things they were asking about was, if you've got policies, can you show us when you're reviewing those policies? And certainly policies need to be reviewed on an annual basis. It might mean that they need to be reviewed far more frequently than that. If we're getting guidance from our professional bodies, if we're seeing reports from the National Crime Agency, if our own data is highlighting changes to our work, changes to types of client, then we need to change policies, and we need to evidence that change of policy too. The relevant law relating to anti-money laundering you'll be aware of. We needn't worry ourselves about all of that. The law is in a constant state of flux as far as fraud is concerned, as far as criminal activity is concerned, as far as money laundering is concerned. The criminals, the people that are participating in all these sorts of activity are clever. They're using IT, they're developing what they're up to all the time, and therefore we have to develop, monitor and manage what we're up to. All the anti-money laundering legislation will be applicable to all firms, no matter what sort of work that they do. Unfortunately for you and I as conveyancers, we're at the hub or the heart of lots of money laundering activity or potential activity. So AML is a major issue in conveyancing work. Why? Because buying and selling real property or business entities gives a great opportunity for criminals to wash dirty money, or to hide money, or to create regimes, schemes, etc., that enable money to be difficult to trace or trace back. We are constantly managing clients' money. We are frequently receiving fees for searches, deposit monies, balance required to complete, etc. We may be required to open or manage bank accounts, particularly where our client is requiring bridging finance. Again, it may be that if we're working in conjunction with private client departments, we may have savings, securities, trust funds, etc., that we are managing and that we're extracting money from to facilitate the purchase of property. Again, we may be dealing with situations where SPVs are being created in order to purchase property, be it residential or indeed commercial. And of course, the creation or operation of trusts, foundations or similar structures, again, gives opportunity for money laundering and indeed on a wider scale, fraudulent activity. So how do we comply with the law? Let's look at some basics and let's look at some generalities, and then let's drill down for a moment or two. It's important that we risk assess what we do, what sort of transactions we deal with, and what sort of clients we deal with. That risk assessment cannot just simply be lip service to the legislation. We have to have policies that are actioned, and actioned in connection with every file and every step within that file. It is essential that we risk assess transactions. So again, you'll be familiar with this, leasehold transactions. Do we assess risk? Yes, we do, because certainly the vast majority of firms I'm dealing with will look with horror if a leasehold transaction has BSA implications. And again, the stats seem to reveal that 50% of firms are not prepared to touch work that has BSA issues relating to it. Well, that's good. That shows that they're risk assessing work when they're onboarding work. I only hope that they're undertaking the same risk assessment with regard to other aspects of the transaction, including money laundering and indeed property fraud. We've got to identify and verify clients and beneficial owners. And it was interesting to listen to what Darren had to say earlier about the various processes that he's got for money laundering. And again, there are firms that still use a traditional way of verifying client ID. Come in with your passport, come in with your driving license, come in with utility bills, etc. And again, as far as that is concerned, it would be appropriate to do some form of electronic verification, and perhaps that's where Darren's ID bronze check comes into play, so that we can indeed verify what the clients are saying to us with regard to documentation. Equally, where clients are bringing documentation in, it's important that we check it and cross-check it against other information that we may have. So we might do an ID bronze check with Darren, we might have documentation in. Well, at least then we've used two different regimes to try and verify ID. Remember, we're required to act as reasonably competent conveyancers. We're not sort of special agents. We're not working for MI5 or anything of that nature. What would a reasonable conveyancer do? A reasonable conveyancer would check documentation that's provided by the client and potentially cross-check it against other resources or sources. Note, we're verifying clients and beneficial owners. Note, as far as that's concerned, we're identifying sources of funds and wealth where relevant. And again, what is reasonable depends on all the circumstances. Mr. and Mrs. Smith that you've acted for the last 30 years, who are regular churchgoers, who come into the office on a frequent basis, who are sort of semi-retired school teachers, etc., have to be significantly lower risk than a client that you're never going to meet, who's I don't know, an international trader resident in Dubai. You know, just the two types of individual, their activity, their residences, etc. One would generate greater risk than the other, obviously. It's not to say that Mr. and Mrs. Smith aren't international drug dealers. And it's not to say that our Dubai international trader is a trustworthy and honest person who is a pleasure to act for. But again, we've got to look at clients, we've got to assess risk, we've got to have procedures for dealing with risk. Where clients are high risk, where transactions are high risk, then we've got to have additional policies, practice and procedure in place. When we talk about sources of funds and wealth where appropriate, do think about and do be aware of the fact this isn't just verifying our clients' source of funds or sources of wealth, but where third parties are assisting our clients in the purchase, we've got to perform the same task as well. And I think with this, we've got to be careful about uploading information to clients at the start so they're not caught out or caught by surprise. Talking to a firm last week who gets a load of referral work from an estate agent. And what I said to them, look, you're getting flack from clients about your AML checks, client identification checks, etc., on the basis that some of this information has already been provided to the estate agent. You've got to tell the referrer that if they're referring work to you, the client needs to understand and appreciate that you will be undertaking these checks no matter what the estate agent has done before, and that the client needs to be aware of why those checks are being done. So rather than sort of surprising the client, look, we can't proceed till we get all this information, or till we've done these electronic verification checks on you, important to forewarn and forearm the client that this is going to be done. So perhaps on our website, perhaps where we're getting referrals, perhaps where we've got sales team that are onboarding clients, they need to be aware, and the client needs to be aware as soon as possible that these issues are going to arise and this information will be needed. I'm going to talk about red flags with regard to money laundering. Most of the professional bodies have listed red flags. Most of those red flags have common themes, but we're going to go through them before we finish. Appointing a money laundering reporting officer for a supervisory role, important, but it's also important to understand and appreciate that everyone in the firm has duties and obligations with regard to money laundering. So you can't just say, well, hey, this is a call for the money laundering reporting officer. You've got to, when you're risk assessing files, when you're managing files, be aware of money laundering, be aware of when to report to your MLRO, and to understand some of the red flags that he or she will be interested in, and the crime agency will be interested in too. It's important that you think not only about clients, but also colleagues and the firm as well. So it's necessary to screen staff to undertake independent audits with regard to the firm and the organization. We've seen this recently, haven't we, with regard to some of the problems with regard to software systems breaking down in the conveyancing process and the mayhem that's caused by it. Auditing, monitoring staff, just as important as monitoring work and monitoring clients. Money laundering reporting officers are the interface between firm and National Crime Agency. Again, the important thing here is remember that we're not reporting criminal activity, we're reporting suspicious activity. And therefore, it's important that as members of the conveyancing team, we're aware that we're looking for suspicion, not crime. So let me give you some examples of things that are suspicious. The client that has a number of mobile telephones, the client that is frequently changing mobile telephone numbers, or email addresses, not crime, but suspicious. The client that's asked you to act on a number of transactions that have aborted in central London with high value deposits being paid on instruction and being returned to the client. Well, that's odd and that's suspicious too. It is important that we understand that the money laundering reporting officer has ultimate responsibility for reporting suspicious activity, but everyone in the firm, every fee earner in the firm, every conveyancer in the firm has that duty and responsibility as well. And this sort of flows into this next slide, suspicious activity reports. Again, it is important to talk to colleagues, to report to your money laundering reporting officer anything that you think is suspicious. And this could be a single act, or it could be a cumulative series of minor issues that would render you suspicious of the client or the client's conduct. The National Crime Agency makes it quite clear that they want firms to report to them anything that the firm regards as suspicious, so that the National Crime Agency can then take a view. So going back to my client that has numerous mobile telephones, we report that to the National Crime Agency, and someone else has reported that this client is involved in drug dealing, or this client is involved in serious organized crime, or something of that nature. Make sure that you record what you're reporting. Make sure that there's a paper trail with regard to reports going to money laundering reporting officers, and assess the data, review it, and then review policies as a consequence. So if we're reporting in the last 6 months 50 transactions where clients were resident abroad, where clients have been referred to us by a particular mortgage broker or something of that nature, then again, we should be building in policies that provide us with additional safety relating to referrals from that client. Or the firm takes a decision that we're not going to take referrals anymore, or we're only going to take a limited number of referrals, or anyone that comes in from that particular referrer is going to be dealt with by senior members of staff. I mentioned red flags, and what sorts of issues are we being told about with regard to red flags? Well, loads of them, as we'll see in a moment or two. It might be that your firm is attracting certain types of transaction that are generating more and more red flags. International clients being the obvious one, clients from particular countries being another, clients from outside your firm's normal area. All of these things have the potential to be red flags. Your role as a conveyancer is to be aware of what people are indicating as red flags, and also to think about what else might be a red flag to you or your particular firm. So I was talking to a firm recently that now will not act for clients unless there is some form of visible contact with the client, be it virtual meeting or actual physical attendance at an office. Another firm is saying, no, we're not even going to have virtual attendance unless we're actually seeing the client. We're not going to act for them anymore. We're concerned about our vulnerability to dealing with clients who are distance clients that we're dealing with via email. Reason for that, the fact that the Law Society SRA are saying you've got to get to know your client. And to get to know your client, this firm is of the view that they've got to meet with the client. So different organizations have different examples of what are red flags. So there might be red flags with regard to types of client. International clients, clients from specific countries, clients where English is a second language, clients that are from a locality that your firm isn't familiar with. Unusual transactions, so transactions between connected persons, transactions between relatives, this sort of thing. Unusual circumstances, the purchase and then immediate sale, the sale at an undervalue, this sort of thing. Unusual sorts of funds, so funds from third parties, etc. Third parties that are being uncooperative with regard to sources of funds. Geographical issues with regard to clients, geographical issues with regard to transactions. So there we are, our firm is based in Manchester, and we're getting loads and loads of transactions for properties in the Kent area. Well, why is that work coming in to us? And what are we doing given the fact that clients perhaps are based in Kent and aren't going to be coming to see us in Manchester that frequently? Other red flags, connections between clients, as I've mentioned, politically exposed persons, not just MPs, but local councillors, etc. Are there issues with regards to their work that means that they are higher risk? Beneficial ownership issues. If we're acting for Mr. Smith in connection with a purchase, and we've got 5 other members of Mr. Smith's family that are contributing towards the purchase of an investment property. Well, again, in those circumstances, are we acting for Mr. Smith? Are we acting for other members of his family too? Jurisdictional issues I've mentioned, sanction exposure mentioned. Someone needs to be looking out to see which countries are on sanctions lists and how many clients we've got in that particular locality. Clients with adverse media issues. I was talking to someone last week about a client who is a social influencer. Someone I hadn't heard of, but someone that is earning fortunes with regard to social influencing, and fortunes coming in from a whole raft of different sources, and is buying property sort of left, right, and centre. Well, all right, as far as that person is concerned, you know, there are sources of funds issues, there are taxation issues potentially. There's also the potential for adverse social media issues. You know, is this person being used as a front for organised crimes or criminality? Who knows? We need policies about client due diligence, about vetting, etc. We need to have enhanced due diligence with high-risk clients. We need to monitor transactions. We need to be aware of sanctions. We need to be aware of politically exposed persons, and we need to have adverse media screening policies. And importantly, as I mentioned earlier, these policies must be kept under review. So good practice, internal risk assessments, policies with assessments that we adhere to, effective training for staff, and comprehensive and effective client due diligence when onboarding clients, and importantly, constant vigilance throughout the transaction. So again, when we're completing the transaction, when clients are executing documents, are we checking signatures? Are we just being alive to the fact that there could be criminality in connection with this client, this transaction that was missed when we onboarded the client? Are we undertaking additional risk assessments? Are we reviewing risk as the transaction progresses? And are we aware of red flag vigilance? And are we making sure that we're taking steps to keep up to date with regard to red flag vigilance? Client account is not a banking facility, nor is it a receptacle for cash. There needs to be policies that we adopt relating to cash that we adhere to. And again, they need to keep under review. There should be red flags associated with lodging funds in our client account. We need to be careful about how we deal with warning signs, how we deal with risk that we become aware of. So every member of the team needs to be aware of the danger of tipping off. Every fee earner, every member of staff needs to be aware of what they report to money laundering reporting officers and how it's done. So it may be that something is so sensitive that you cannot discuss it with anyone other than your money laundering reporting officer. It is dangerous to seek clarification from the client where you have suspicion, but it is equally dangerous to fail to cross-check or to challenge clients where information is being produced that could potentially be suspicious. So asking the client why you have 5 different email addresses and 4 mobile telephones may be a perfectly acceptable reason for both. The client has 4 or 5 different business interests where clients or customers are contacting them, and thus requires 4 or 5 telephones and 4 or 5 email addresses. It's important that we deal with clients' responses in a manner that does not tip off. And it's important again that we have paper trails for documentation. Preventing money laundering then requires awareness from everyone. It requires challenging clients, making sure clients understand what we need and when we need it, to make sure that clients appreciate that they're not being picked on, they're not being sort of selected on the basis that we're going to be awkward with them, but these are procedures and processes that apply to every client in every situation. Someone asked me the other week, I've acted for a client in the last 3 years in connection with 2 transactions. Do I need to do a further sort of risk assessment with regard to money laundering in connection with transaction number 3? And the answer is, I would maintain that you should be undertaking risk assessments in connection with every transaction. Now, it might be that we can have a soft touch where we're dealing with clients on a regular basis, but nonetheless, it still may be necessary to do some form of assessment. Same client, but unusual transaction. Same client, not unusual transaction, but buying from cousin, buying from brother, selling to aunt. Again, may just mean that we need to keep a closer eye on this transaction than others. Important that we record events and outcomes. If we are suspicious, if we are monitoring a file or undertaking additional supervision of the file, what are the outcomes with regard to that additional work? And revising policies on the basis of data, important. So in the past, we've always acted for clients that have come into the office and physically seen fee earners. We're now, courtesy of our website, attracting clients that we're not seeing. Therefore, policies need to be revised. And it's important that we share information about clients, information about what clients are telling us. Tilex have red flag indicators. We've talked about most of these before. The client, the parties to the transaction, sources of funds from third parties, choice of lawyer. Again, interesting. Who else is involved in this transaction? Which third parties are involved? Estate agents, mortgage brokers, lenders, etc. Unusual transactions. You know, the client that has historically bought terrace houses in Wolverhampton is now buying a high value apartment in central London. Maybe a perfectly valid reason, a lottery win or whatever, or there may be something else that's unusual. Now, when I say unusual, I'm not saying that I immediately report this to my money laundering reporting officer, but again, I might question or challenge the client about why this purchase and, you know, how the client is funding this transaction. And it may be that I and my supervisor will be watching this transaction a little more closely than others. Where clients can't produce documents or don't produce documents quickly enough, then again, that's suspicious. Electronic verification systems might be appropriate. Using Darren's systems, again, might assist us. Changes in instruction that appear to be illogical. So the transaction that's under no rush or pressure all of a sudden becomes a rush or a pressure without obvious reason. SRA data reveals a number of things. It reveals that people are well aware of red flags, but aren't necessarily doing things about it, or aren't providing policies that enable additional monitoring or additional supervision. And it's important that we comply with policies and that we review policies on the basis of external factors, SRA warnings, Law Society or other professional body warnings, or our internal data. You know, we're being swamped by foreign nationals buying investment properties in Bristol at the moment, or we're swamped by clients from Hong Kong buying off-plan flats and apartments in Liverpool. Well, again, in connection with the latter, there was a huge issue. There remains a huge issue with regard to claims concerning Chinese and Hong Kong clients purchasing off-plan flats and apartments in Liverpool. The issue and the problem's been going on for years. With regard to clients, who are they? And watch out for co-owners. There's no such thing as a collective client. Watch out for companies. You know, is this person who's a director of a company giving you instructions? Have we got proof from the company that this person is authorized to give instructions? Have clients got transactional experience? In which case, of what type of transaction? I was talking to Andrew Butler KC recently, and he was telling me that with regard to the Building Safety Act and the problems associated with it, you should be treating any client buying a leasehold property that's burdened by the Act as a new client, sort of a first-time buyer, because the Building Safety Act throws up all manner of new issues that require addressing. Identifying client objective and assessing risk relating to it, and be careful where that objective changes, again, is something to look out for. Money laundering policies are important. Making sure we have a policy, but then significantly making sure that everyone is aware of the policy. Talking to someone about CQS inspection and SRA inspections. One of the things they'll do these days is say, let's have a look at your money laundering policy, and then they'll meet one or two fee earners and they'll ask them what the policy is. And again, I can tell you that I was talking to someone who was telling me that on an inspection, the firm had the most fantastic money laundering policy. But the problem was that of the 3 fee earners that were interviewed by, I think it was the CQS, none of them knew what the policy was. As far as the money laundering process is concerned, we need to check and verify client identity. Manual system, electronic verification, it doesn't matter what we do, we've got to be careful before we onboard the client. Then we've got to check sources of funds. and check sources of funds from the client and third parties that are funding the client. We've got to watch out for interdepartment transfers of clients. Again, trick, fraudster thinks, well, if I go to a conveyancer in the firm, they're going to want to know everything and anything about me. They're hot with regard to their AML checks, client verification checks, etc. I'll instruct the commercial team in connection with a creation of a limited company, an off-the-shelf company, fairly non-contentious type of transaction, fairly simple transaction for the commercial team to deal with. And then what I'll do is ask the commercial team if they can refer me across to a conveyancer in the firm in connection with a purchase, in the hope that that original relationship with the commercial team means that the conveyancer will take a degree of comfort from those instructions. Again, that might be perfectly acceptable, and the commercial team might have rigorously cross-checked and checked the client's ID, client sources of funds, etc., but it might be that they haven't. Fee earners need personal training plans, firms need maintenance of record evidence, and it's important that we respond to AML inquiries that we get. It's important that we have internal data relating to any AML issues that we are encountering. Talked about that, we didn't worry about that slide. Property and mortgage fraud, we need to be careful. I mentioned already a red flag is who's dealing with the other side of the transaction. I would also maintain who else is involved in the transaction as well as the clients. Just as asking myself, are these people that are known to me and known to the firm? Have there been any problems in the past? Is this entity new to us? And therefore, do we have to be careful and cautious? We need to risk assess fraud, and we need to constantly monitor the risk of fraud as the transaction progresses. Where there's a high risk of fraud, where there's a high risk of money laundering, we need to undertake enhanced identity checking. We need to watch out for seller identity fraud, as was mentioned by Darren a little earlier. And we need to have staff training and then annual updates and reviews. It's important that as a firm, we have departmental risk management. So someone in the conveyancing team should be a conveyancing department risk manager, looking at the work that's coming in, looking at the risk associated with that work, and making sure that we're keeping data, making sure that we're recording risks that we are generating, and making sure that risk is under review. I repeat, if we're getting lots and lots of instructions in connection with one type of work, one type of transaction from one type of client or one type of introducer, then that is potentially bad news. Bad news from a commercial perspective, bad news from a risk perspective too. It's important that where we're identifying greater risk of fraud, greater risk of money laundering, that we have checks in place, that we have processes and policies in place, additional supervision, a policy that a particular fee earner that's experienced in that type of matter deals with it or supervises it. It's important that we undertake annual risk assessments. We review what's happened in the previous year, looking at indemnity claims, looking at client complaints, looking at what we're doing when we are onboarding clients and when we are closing for files, so file review data, looking at COPE or COFA notifications, and checking what the SRA or other professional bodies are reporting on. So I think there's a recent report from the Law Society, wasn't there, on money laundering. And watching out for conflicts, conflicts of interest, conflicts as between policies, conflicts as between departments. We need file management policies so that key information is accessible to fee earners, so that fee earners are able to have a standardized method of risk management profiling, and that we are keeping records with regard to monitoring the transaction as it goes on. I mentioned key date management. That's a sort of standard file management, but risk management with regard to the client, with regard to the transaction, equally important. We need to make sure that information that we've got is kept properly, of course, and we need to make sure that we're collating and collecting the right sorts of data and that we're using it for AML purposes. We need to make sure that we're performing customer due diligence. So we're evidencing the decision-making process by the firm in connection with transactions. Why are we taking transactions on? And what are the risks associated with those transactions? Looking at generic risk and looking at specific risk with regard to the transaction. Pushing on if I can. Enhanced due diligence, when's it necessary? Well, it's necessary for money laundering, it's necessary with regard to fraud and anti-fraud measures, where we're dealing with high-risk third countries, where we're dealing with politically exposed clients, where we're dealing with high-profile clients. It's important that we ensure that we are ongoing with regard to our management. Simplified due diligence may be appropriate, as I say, where we're dealing regularly with clients that we know, where those clients are coming into the office, where those clients are doing things that are consistent with that which they've done before. Again, we can have a lighter touch with regard to money laundering and with regard to fraud with such clients where it is appropriate. But again, I repeat the point that just because we're familiar with a client, just because we've acted on 3 or 4 previous occasions for this client, doesn't mean we can let our guard down. It means that we can be more prepared or more willing to act, but it doesn't mean that we can be relaxed with regard to identity checks, money laundering measures. When we're undertaking a risk assessment, we should have risk assessment policies. We should have evidence of file risk assessment, transaction and client risk assessments. And again, all the sort of red flags that we touched on earlier would all be sort of potential considerations. So location of client, number of years that we've acted for the client, this sort of thing will be factors that we put into our risk assessments. The nature of the work that we're doing, the type of client, the delivery service, is it going to be a virtual delivery service or face-to-face delivery service? And remember, we're assessing risk with regard to the client, we're assessing risk with regard to the transaction, we're assessing risk with regard to third-party involvement. When it comes to sources of funds check, it's important that we understand the law. Section 327 of the Proceeds of Crime Act states a person commits an offence if they conceal, disguise, convert or transfer criminal property or remove criminal property from the UK. So if I'm committing benefit fraud and I'm using the ill-gotten gains from that benefit fraud to purchase a property or to use as a deposit on a property, then that is money that potentially would enable my activity to be caught by Section 327. A deliberate non-disclosure of fact, in other words, a failure to tell you where I got my money from or failure to tell the authorities where I got my money from, would constitute an offence under that section. Section 327, so concealing or disguising is wide in nature. It includes mixing criminal funds with legitimate funds. Deliberate non-disclosure of facts, as we mentioned. Section 328, entering into an arrangement or becoming concerned in an arrangement which they know or suspect facilitates acquisition, retention or use or control of criminal property by or on behalf of another person. So if we're facilitating the transfer of equity in a property from X to Y, that potentially could be a 328 offence. Allowing criminal funds to be used for the purchase of resi or commercial property, again, Section 328 offence is likely to be committed. When we talk about sources of funds, we're talking about funds that are being used to fund a specific transaction. And what we need to know is where those funds have come from. And when we do that, it is important that we assess and appreciate a number of things. One, it is necessary where clients are borrowing money for friends or family or where gifts are involved that we chase the funds. So £50,000 in connection with a purchase is being provided by a great aunt. We need great aunt to confirm where that money has come from. So if great aunt says, well, it's an inheritance that I've just received, well, it wouldn't be too difficult for great aunt to provide email or correspondence with regard to solicitors for the estate relating to those funds. If it's savings, and someone asked me this recently, so the client has £100,000 in savings and says, well, I've saved £1,000 a month for the last 100 months or so. Would it be necessary to see bank statements going back however many years showing that money going into a savings account? Well, what I would say is it depends on the client. If it's a client that's new to us, if it's a client that's high risk, I'd probably want to see every payment, every statement relating to every payment. If, on the other hand, it's my imaginary Mr. and Mrs. Smith, who we've acted for the last 25 years, I might say, well, all right, can I see a bank statement or a savings account statement as of now showing £100,000 in? And if you're saying you've paid £1,000 a month in from your salary over the last however number of years, can I see a bank statement going back to June of this year and a statement, say, for May the year before, just showing this money being dripped into the account? With sources of wealth, again, bank statements, wage slips, etc., are going to assist. Income from share capital, business activity, again, is going to assist. But just be alive to the fact that documentation can be forged. Do be aware that as far as this is concerned, we do have to be careful to make sure that we can substantiate decisions that we're taking. So again, if a client says I've got funds from a third party, record the information relating to the transaction. Ask the third party to verify funds. Again, important that we understand the client, important that we understand the third party that's the source of these funds. Again, this is all part of getting to know your clients. I think the SRA, other professional bodies are sort of bleating about with some justification. So we've got to know our client to make an assessment that what they're doing, the funds that they've got and they're utilizing are appropriate given their background and circumstances. So we've got to review things on a case-by-case basis. We can have policies, we can have procedures. We've got to look at each client and each transaction in the round. And again, our decisions need to be documented. I'm conscious of time, so what I'm going to say now is, does anyone have any questions? Darren, if you're around, in case anyone has any questions about product, and I'm now going to have a look to see in the chat facility whether any questions are arising. So does anyone have any questions? Any issues? I don't see anything in the chat box. Stephen, Robert, are there any questions that you can see?
I think it's all quiet on that front, Ian. I am conscious of time, but I mean, if anyone wants to send a question to myself or Ian Quayle, any responses from GoToWebinar, so you will receive an email following this from GoToWebinar. If you respond to that email, that will come to myself and I can pass anything on to Ian or Darren. But I think, at the moment we're quite quiet, Ian. So.
Very good. All right, Steve. Well, thank you for assisting and manning the IT side of things. Thanks, Robert. Thanks, Darren. And thank you for all attending today. It's much appreciated.